you, Simon. Thank you, Dan. Yeah, and welcome to everyone who's here. I appreciate that I don't know the attendees here today. Thank you for that introduction, Simon. I'll just mention a couple of things. Yes, been trading 22 years, got involved in trading in the late 90s, 97 I think it was. Went on a trading course like many people do, and here I am 22 years later. One thing for me, I had no intention on being a full-time trader. That was not why I got into trading in the first place. I went on it because I was just interested in the markets, and it just so happened that I worked in the fund management industry anyway, and so I just thought, oh, this whole trading thing might be quite interesting, and I got into trading because I thought, well, I might as well do something more with my savings and see if I can manage my savings myself rather than giving them, ironically enough, to a fund manager. And so that's what got me into trading. And 5 years later, I decided to leave the industry. I loved my job, never had the intention to leave my career, but I was burning the candle at both ends. In that industry, you do a lot of corporate entertaining, and I'd got to a point where I felt that I didn't want to be doing all of that stuff every or several nights of the week. And so anyway, so I left in late 2001 to become a full-time trader, and I thought, well, I'll give it 12 months, and I'll see how I get on. And here I am, 19 years later from when I first went full-time. So that's a little bit about my story. Simon's kindly said a couple of things. Yes, one thing I've always wanted to do, although Easy Trader, the company that I share with my business partner, Kim Watson, he is a man. A lot of people think he's a woman when someone says your partner, but he's a old friend of mine and business partner. We set up Easy Trader back in 2002. One thing I've always wanted to do, even though we're an education company, is not be like a typical education company. I didn't want to just teach. Well, ironically, what am I about to do today is show you a load of past examples of some trades and some setups in a moment. But I always like to put my neck on the line and do things where I can. So if I'm doing a physical presentation, quite often I'll just do a live trading hour. And that gave me the incentive to do some live head-to-head trade-offs. I'm 5 years undefeated at the London Forex Show, live head-to-head trade-offs. And yes, I've done some trading challenges, and those challenges, like Simon mentioned, I really did those. I've done on both of those. It's just to show what can be achieved, but that is highly speculative because the risk that I take on those challenges is way more than I ever recommend to people to take as far as risk is concerned. So I do want to put that out there that I do them just to show what can be done with, but it does take a bit of leverage in order to do that. So but yes, I've done those challenges as well, and things like the BBC program and the likes, which managed to track me. They managed to put up bits of me when I'm running down a street and stuff. But anyway, it was all good fun. Right, okay, so today's presentation for myself is a simple day trading strategy. That's what Simon asked me to do. This actually strategy I've been using for years, and like most of my strategies, I'm not a trader who changes strategies regularly. There's nothing wrong with that, because I know there's a lot of very mechanical based traders out there who like to change their strategies regularly. I tend to prefer to trade just with a small number of strategies, and then I'll just carry on using those same techniques over the years. So this one I've probably been using for, well, since the financial crisis. So really since 07, 08, I would have been using this. So let's go into it. See if I can get my slides to work. Okay. So it's an intraday setup where you are trading really just the short-term price momentum. So you're really trading this on a 5-minute chart, although you can use it on 15-minute charts, 30-minute charts if you want to, even hourly charts actually. But it was always established initially as an intraday setup based on those smaller time frames. But what we're going to be doing in today's presentation, it's certainly in the first half of this presentation. I've actually divided this presentation up into two. There's two presentations in one, actually. So in this first half, I'm just going to show you this simple pattern, and then we're going to move on in part two of the presentation into some other stuff all around this same pattern. So I'm looking for the price to be moving higher on a 5, a 15-minute chart, and on a 30 and hourly charts as well. So that's what I'm looking for there. And I use an RSI indicator for this pattern with a 6-period setting. So it's a smaller setting than most people would use an RSI. You know, the standard sort of setting for RSI might be a 21 period. Some people use 14 periods, but I've used the RSI with a 6-period setting for a specific reason. And so I'll show you that in a moment. So it's just a straight 6-period setting on the RSI. And what I'm looking for is effectively the RSI to get what most people call as being overbought. So I want to, if the market's going up, I want that RSI to go above 90. So whereas a lot of people would be saying, oh, that's now overbought, so that therefore the market must now come down, what I'm looking for is it to get overbought, because that tells me that the market's strong, and that in fact an overbought market can remain overbought, as many of you know. So what I'm looking for is the RSI to get over 90, and then for a small pullback for me to get long and then carry on in that same direction that the market's been moving in. Okay, so then we got the pullback to get long. All I'm looking for is a small pullback just into short-term support. I'll explain what that pullback is, and I'll show you visually shortly. Now, one thing I've just realized is that I've got, I should actually bring up the questions if I can see them. That's not it. I don't know if I can see the questions here. Oh, it doesn't matter if I can't. Okay.
Charlie, I've got the questions. I'll repost them so you see them. Yeah. Fine, so you'll see them come up.
Excellent, great. Okay, so the target would be the prior closing high, and then I'd manage the trade out. So what do I mean by that? Is if I can bring the pen up. I haven't used Omnovia. Sorry, Omnovia. What we're using here, GoToWebinar for a while. But if you've got a price which has been going up, made a high, so over here, it's done a bit of a pullback, bought into the pullback down here, and it comes back up to that prior high. That's the first profit target there, and I'll explain why as we go into the visuals, and then manage the trade from there if it is going to carry on breaking higher. So that's essentially what I'm looking for there. Now if I turn the pen off completely. Okay, so let's go to an example. So don't get too worried about this. There's a fair bit of stuff on my charts here, but what we're looking at here are on the right hand side is the 5-minute chart. Simon, can you just say yes or no? Can you see my cursor as it's moving around on the screen?
I can, yeah. I think we can make that out.
Good. Okay, excellent. So on the right hand side, we've got the 5-minute chart. Then just to the left of that is a 15-minute chart, and then the 30-minute chart, and then an hourly. So I've just got them scrunched up so that you can see what was going on. So we can see that the price action was up, up, up. Now I use a MACD down at the bottom, like lots of traders use an MACD indicator. I know there's plenty of traders who don't use any indicators at all. Doesn't really make any difference, but you can see my MACD indicator is reflecting the price action in that it is above 0 across the board at that time. But again, that's not really what this is about. You don't really need a MACD indicator for this. The only other things that I've got on this chart are my moving averages. So, and again, I'm very much a moving average based trader. I like moving averages as support, as resistance, and as confirmations of trends as well. So I don't use them for things like crossovers as such, but certainly once they have crossed over, then that gives me a confirmation of what may be going on in a market. So if we now go out to an hourly chart, you can see this is just that same chart that you've just seen, but just you've got more information on there. As far as the purple lines are concerned on this, when I took the screenshot, this is actually an older presentation I've given Simon before, but the purple lines are just show the prior day's highs and the prior day's lows. That's all they are. So it's just an indicator. It comes onto my e-signal charts and showing prior day's highs, prior day's lows. So don't worry about that. The main thing is, yes, I've got some moving averages on here, like lots of traders use moving averages, but really this pattern at the moment is all about what the price is doing and the RSI indicator. So if we now go back down to the 5-minute chart, and what I've said already in the opening slide was that I want the RSI to get to close above 90. Now you can see on my chart here, I've got 2 red horizontal lines, and I've got them both set at one set at 10 and one set at 90, because this is obviously a buy setup, but if it was going to be a sell setup, then we would just reverse it and the RSI would have to go below 10. Anyway, in this example, this was a trade that I took with our traders in my live trading room, which I'm in 2 to 3 days a week with the traders, and Kim, my business partner, is in the other days. So we've got a situation where you've got price going up, nice price momentum, nice strong candles closing well, and we've got an RSI which is now above 90. Like I said, a lot of traders would look at that sort of information and say, oh, that's now overbought, and they'd be wanting to sell. But 70% of the time when this happens, price, once it's done a pullback, it will come back up and retest those highs. Over 70% of the time, in fact. So over 70% of the time, price, once it's done this, and once RSI has gone above 90, once it does a pullback, over 70% of the time, it will come back and at least retest those highs. Okay, so that's what we're looking for. So we've now got the setup where the RSI is above 90, price going up, and like I've said, it would be the opposite. If price was coming down, 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 and the RSI was below 10, then we'd be then looking at the opposite. Okay, so I'm now waiting for a pullback. Now go to the next slide. So it took what, 20 minutes to pull back. And what I'm looking at here is you can see these 2 black lines, and I'm going to actually share these with you today, what these actually are. So I'm going to show you what these are, what the settings for these are in sort of part 2 of this presentation. So for now, you're going to have to just go with it. So what we're looking for is the RSI going above 90 and then a pullback. And the pullback has to come back down to that lower black line. Okay, there's 2 on my chart here, and they're basically 2 5 exponential moving averages. That's what they are. One set to the high price, one set to the low price, but I'll go through it properly with you shortly. So if price can pull back to the lower one, great. Then we buy with the intention of price coming back up to that closing price back up there as a minimum, to come back up to that closing price. So if I bought it right down here with then a first target, as I went through earlier on, back up at that closing price back up here. So, and as far as stop loss is concerned, you just use like a normal sort of intraday stop for these types of trades based on ATR or whatever. It's already done a bit of a pullback. So if I was looking at a chart like this, then I'd just use an ATR of like 1.5, and that would be enough. Okay, so then we go to the next slide. Okay, it moved up, back up to those prior highs. That's what we're looking for. So that would be the first profit target. In fact, this trade went a lot higher, but this was, like I said, this was a trade that I took in our trading room, and I just took some screenshots after it when I was putting this presentation together originally for Simon. So first profit target, back up at these highs, and then run the second half. And the second half had a really nice runner on that particular day. You can see this is a couple of years or so ago, because the euro dollar was at 116. But nevertheless, the patterns are the patterns. In fact, I see. Oh, okay, it's interesting. It actually done it again. I'm just saying that's interesting because I can see that the RSI got above 90 again back over here, did a small pullback, and then started going again, but didn't pull back enough on that occasion. Okay. So that's essentially the visuals of that particular pattern. This was it in our trading room. This is what my trading room looks like. And so I'm on a mic like I'm on talking to you guys right now, but the traders can see my screens. They're actually, my screens are away to the right at the moment, and I'm logged in with those guys right now. But and we're in a trade right now as well. So I'm trying to manage that trade whilst doing this presentation. So and you can sort of see I put the announcements up, but I call the trades live on the mic, and then I always put oh, the target, first target was here, etc., etc. And you can see what people were saying. Best trade I've been in for a while, or whatever. But that was the trade, and you can sort of see as it went what the traders were saying in the trading room. So they can type in the trading room whilst I'm talking. Anyway, bit of a plug there for my trading room. But anyway, that was that. Okay. So it's using that price momentum and the RSI, knowing that if that RSI gets above 90, there's a high probability that if it does when it does a pullback, if it can pull back to that lower 5 EMA, which I'm going to go through that with you in a minute, then it will at least, over 70% odds, will want to at least come back up and retest that prior high. Okay. So like I've said, look for a pullback after a reading of 90 or above. And it's completely the opposite for shorts. So for a short, the reading needs to have been below 10. Okay. And like I've said, if the risk reward works for the first target, the trade is on. And what do I mean by that? Well, what I mean by that is if it's got a minimum of 1-to-1 risk reward to the first target, then that's okay. Because then if we can then run it on the second half, then we can then get more out of that trade, a bit like that trade example I've just given you there. So it needs to really be a minimum of 1-to-1 to the first target. And if it qualifies in that, then the trade's on. And then we can say, well, is the trade worth running? And that is based on, or if the trade's worth running, that's based on your other analysis that you might do, bigger picture analysis. So then you can say, okay, right, I've got my first target in. Right, okay, what else is going on here? Can I run this second half to another higher level of resistance or support if it's a short? Okay, so that's the end of the part one on this. I need to now go through with you those moving averages, like I said, I'll go through. But at this stage, I'll just say that I do have a free trading for a living report, and if I can bring it up, no, I'm not going to be able to bring it up, am I? No, it's all minimized on me. Okay, I can't actually get to it. Let me see if I can just hit escape. Oh, that doesn't look good. My screens have all gone.
Sorry, we can still hear you, Charlie.
You can hear me, right? Yeah, it looks like oh, there it is. Okay. Okay, right. That didn't work, so I'm just going to put the screens back up. So, okay. All right. Okay. Oh, there it is. All right. Okay, I was going to just bring it up and so you could see it. But the Trading for a Living report, it's free. You can just sign up for it, and it's my take on my personal experience of trading for a living. Because lots of people get into trading and they want to trade for a living, but there are lots of considerations when it comes to people wanting to trade for a living. So that whole report talks about, yes, it's a lifestyle choice, but it talks about the monetary aspect of trading for a living. It talks about, everything around being a full-time trader. And so if you're interested in that, then you can just get that report and you can download that once you sign up for that. Just go to, I think you have to do the HTTPS and all of that in order to get type it in that way in order to get that report. But that will get you that report. And like I said, it's my take on, well, this is a serious business. And what I see is a lot of people wanting to trade for a living when either they're undercapitalized or they haven't got enough experience. And so I talk about all of those sorts of things as well, so that people can actually read that report and say, yeah, okay, now I've got some other things to consider before I actually make that leap myself. So there you go. So that's that's that.
That link's in the chat box, and it's working. That link that I've just put in the chat box is the right link, and it works.
Fab. Oh, great. Thanks, Simon. Right, okay, so moving on then. So this next tool is those 2-5 EMAs. And these came about as a result of me looking for a stop loss exit strategy. And years ago, when I used to do a lot more day trading than I do now. I still day trade. I'm in our day trading room, like I said, 2 or 3 days of the week. But I used to almost solely do day trading. Certainly, it was a lot more of what I used to do. And so I was always looking at different ways of exiting profitable trades. So rather than having a profit target, for example, actually, can I just trail my stop up and use some sort of trailing mechanism? And that's actually how this came about, this next tool, because I was looking for like I said, an exit strategy. It's simple and can be used in many ways, as I'm just about to show you, and I've just shown you in that previous example. But all we need to do is add those two moving averages onto a chart. One of them is a 5 exponential moving average based on the high, and the other one is a 5 EMA based on the low. And it's as simple as that. It was such a simple concept, but it was a great way of using to use as an exit management tool. In fact, I've just done an hour's exercise with our traders in my trading room just before coming on this morning, and we were using these, I call them my bands, and we were talking about how we, various ways of using them for, funny enough, for exiting out of profitable positions. So if you're going to put it onto your chart, when you normally put a moving average on, you type, oh, okay, it's got to be exponential, length 5, no offset, and then price source. That's how it comes up on mine. Then I've changed it. It will always default to the close. So when you're putting a moving average on a chart, it will always default to the close. But you need to change that, whether your charting provider call it price source or not, it doesn't matter. You just need to change it from the close to the high. Then you repeat the exercise, save that, repeat the exercise, then put another 5-period moving average on, and then change it to the low. And that will then give you a chart that, voila, looks like this. So you've now got price action with these two exponential moving averages on. So the way that I used them all those years ago was to say, right, okay, well, when price is trending up, so if I can bring the pen up again now. So when price is trending up, like in this example here, once price closes below, like here, the lower band, as I call them, the lower 5 EMA, then that, if I was long through this, then that would be my exit once we close below that. So I used to use that, and the same through here as well. So I'm waiting for a close below. We didn't close below here. This was overnight, but anyway, didn't close below, so waiting for a close. I haven't got an example of where it's closed below there, but let's have a look here in this downwards move here. So if you were short through all of this, you're waiting for it to close above now, because it's a downside move, above the moving average. Well, that didn't happen until here, so there would have been an exit. So it was that principle that I used these, and they were really useful, and they still are to this day. I still use these a huge amount to this day, just the 2-5 EMAs set this way. And if you put them on a chart, you'll find a number of different ways that you can use them. And turn the pen off, which hopefully you'll find of use. But what I did, I started using them in that vein, and then I started to realize that I can actually use these for entering trades as well. Because what I noticed was that when price was moving up, quite often it would move back to the lower 5 EMA and then bounce off of it, and off it would go again. And so I started to devise strategies around that. And that one strategy I've just shown you using the RSI. So if, let's pretend in this situation here, whereby let's pretend that we've got an RSI above 90. So we've got the above 90, greater than 90 let's say over here, then what I'd be looking for is a pullback to the 5 EMA to then get long, to then run back up to the prior high, the closing high, take half there, and then try and run the second half. That would be the principle behind that. So all of a sudden, I'm now using them as an entry tool as well, not just an exit tool. I started to realize, blimey, this whole price coming back and testing these moving averages can be quite useful. So have a play with them, because you'll find that they can really be of use. So that's what I'm using there for that RSI strategy, is these 2 5 EMAs. Okay, so you pull back to the 5 EMA, there's your buy, away you go. Okay, but interestingly, like I've said, if I go to another chart, I started to notice that I didn't need to always sell a double top, for example, straight away, whereas a lot of traders will see a double top. So we've got a double top on this chart here. So let's bring up a pen so we can see that we've got this double top through here. But rather than actually selling it immediately as it gets to that high or just breaches that high, what I would then do is wait for price to come back down, and once it closes back inside my 2 5 EMAs, then I would sell it. And so more and more I would find uses for using these two moving averages. Partly I can use them in a trending environment as an exit tool in a trend, but I can also use them to get me into a trade in a trend, like in that RSI example. But even on things like reversals, like double tops or double bottoms, wait for price to come back, close inside those 2 EMAs before actually selling it. So yeah, I give back a little bit of profit, but at the same time, I'm not getting in up here only for it to just blast me out of the water. So a really, really useful intraday tool. And you can use them, I say intraday, but you can use them on any time frame. This is on an hourly chart here, but it doesn't really matter. It could be used on any time frame. In fact, this is a monthly chart of euro dollar, as you can see, and I've got this big trend lines in play here. Now, again, another example here of using these bands, if I bring the pen up again, is over here, and I call them bands, or the 2 5 EMAs. Price got up to this long-term trend line, this long-term green trend line. Price got up to there. It was also these prior lows. So this was early 2018. So myself and our swing traders were looking to sell up in this zone. Got nice overlapping technical resistance here. But rather than just selling straight away, what did we do? We waited for price to close inside the bands, the 2 5 EMAs, before then, and then getting into that trade. It was the same actually down here. I was buying, fun enough, euro dollar down here, but again, waiting for price to close inside the 2 5 EMAs, rather than just getting in right down. Why would I? There's no need for me to get in right down here. So you start to find ways and tools of using these 2 5 EMAs in many different ways. So do put them on your charts and have a play with them, because you can find, as a stop management tool, but also for sometimes getting you into a trade, just giving you waiting for a bit more confirmation before actually getting into a trade, especially off a reversal as well. But so there's many different ways that they can be used. I think I've just covered that off. So as a stop management tool, as I've said, trailing the stops up, your stops up, you can just be saying, right, okay, well, once it closes below that lower 5 EMA, if the market's going up, then I'll use that as an exit. Using combined with support and resistance levels, as I've just said, double tops, trend lines, all of that sort of stuff, rather than getting in immediately when price hits a resistance level, which is fine, but I just find it's quite nice to have that confirmation. It closes back inside those 2 5 EMAs, and then I can put a genuine stop at whatever the high has been, like in that previous chart there. So we go back to this this example here, then I could put the stop, once that's closed inside, then the stop can just be above those highs, and that's what I use a lot of the time. And for trend trades, once prices have closed out on the outside of the leading moving average, that's one thing I didn't talk about. So let's go back to an example here. For a trend trade, once price has been closing out on the outside of the leading moving average, what I'm then looking for, so if we take it down here, here's the leading exponential moving average down here. We've got a strong closes on the outside here. Then you've got a pullback to get long, and it's that type of thing. Once you've got a change in trend, then we've done a pullback here. Then we've got, okay, here we go. Here's our strong closing up bar again, then a pullback to get long. So that's what I mean by once we've had a strong close on the outside of a moving average, then again, I can use those for getting me in. So there's a lot that I can use them for, and yet that's not how I started out using them. I started out using them purely as a stop management tool, but as the years have gone on, I use them in pretty much the majority of my trading, for both stop management and also for getting into trades as well. So simple to use, put it on your charts and then have a play with them, and the more you just have them on your charts, you'll see many different ways of using those moving averages, so of using those two EMAs. But do couple them up with the RSI indicator as well, and when you see those readings above 90 or below 10, then again you can use them coupled up with that. I think that's it. Blimey, I didn't know how long, I didn't have a clue how long this presentation would last, and I know that I've gone really short on this. I apologize on that, but I put this presentation together and thought, oh, you can never tell how long a presentation is going to last, but I'm back at the end. So Simon, I do hope there's a couple of questions, so apologies for that.
Not a problem at all, Charlie. Thank you for that. There are a couple of questions out. Maybe if you can open your questions window, you should
don't know
see,
if I have a questions window.
or
I can see
chat
attendees.
Box. No. It should be chat.
The chat. Oh, okay. Oh, I see. The audience questions. Is that what I'm seeing? Yeah, it just says audience question.
Right. Okay. Is that how it looks? It's the annoying thing. It's all different for me because I'm the organizer. It gives me slightly different titles for things. But I didn't interrupt because we were going through it quite nicely. But if we can rewind, maybe back up to Tina. This goes back a little bit, asking about the MACD standard settings and the RSI on which time frame.
So I'm trying to see the questions. I can't. Oh, okay. Standard settings. Yeah, I can't see who the people are. This just says audience question. That's fine. MACD.
Okay.
Yeah, when I'm using the MACD, yeah, that's a standard setting, but I'm not actually using that for any of this what I've presented on today. It was just that it was on those first screenshots. When I took the screenshots, the MACD is just there. So, but yes, I do just use a standard setting on that. The RSI, yeah, I mean, the example I've given today there is based on the 5-minute chart, but again, the markets are a fractal, so I have some of our traders will be using it on a 4-hour chart or even on a daily chart, so you can use it pretty much on any time frame. But I was asked to do a presentation on intraday trading, so I've shown intraday type time frames there with a sort of 5-minute chart. But yes, you can go out to pretty much any time frame on it if you want to. The ATR stop loss, yes, that would be based on the time frame that the trade is on. So when I went through, if I can go back, excuse me, go back through the slides here. Yeah, the ATR would be based on the time frame you're trading. So if it's on a 5-minute chart, you take the ATR of that 5-minute chart when that setup was there. So the ATR, I'm eyeballing it at 1.5 times ATR. I'm eyeballing that would mean that the stop loss would be about where my cursor is moving, wiggling around. That would be where it would have been. Where would Charlie enter on this trade? This is going back to this. Yeah, the entry was on that lower 5 EMA. Okay, so that's where the entry would have been on that. Right, I can ignore the next question because I've gone through all of that. Yeah, someone said thanks for the clarification. Yeah, the 5 EMAs. What time frame is best for the 5 EMAs as it closes on? There's not a time frame that's best for the 5 EMAs. Again, it doesn't matter what charts you're looking at. In fact, if I bring up a live chart right now, V signal, so this is my live charts. It doesn't really matter what the time frame you're looking at. I've got them on. This is on an hourly chart. But if I change my time frame to a 5-minute chart, then I'll be looking at what price is doing with relative to them on a 5-minute chart. So it doesn't really matter what time frame because the markets are a fractal and they'll move. So it depends on what if you're seeing a pattern on a 5-minute chart or whether you're seeing a pattern on an hourly. It doesn't really matter. You just use the bands or the 5 EMAs based on that. You missed audience question. You missed how to make the 5 EMAs? I'll tell you what. I'll take us. I'm just gonna. If I just remove a load of all the other moving averages that I have on that chart there, so you can now see just that chart with just those 2 5 EMAs on. How you make them? If I actually click on this, there you go. So exponential 5 is the length, and then the price source is set to the high. So if I can just drag this across a little bit. Oh, not that. Not that. So what you'll now see, so normally when you've got a chart on, it will default to the closing price. That would be the closing price normally. The way to get the 2 5 EMAs on is to change it. So you have one set to the high, and then you have ones, and then you save that, and then I've already got it saved anyway, and the other one is set to the low, and that's how you get that. Okay. Hopefully that is answered that question. Is it like a Bollinger Band? Well, no, because a Bollinger Band is not simply 2 moving averages. I just got into the habit of calling them my bands, but it's just an expression. So no, these are purely 2 5 exponential moving averages. Best working in a trending market only. I think I've answered this one as well. Not necessarily, because I mean, depends on which way you want to use them. If you're using them as a stop management tool, then yeah, great for using as a stop management tool. But if you're using them to get you into a trade and it's not a trend, it could be something like a double bottom or a double top. So if I can now find a double bottom or a double top, see if we can find a nice double top somewhere. Okay, so well, that's just a load of chop really, but well, I'll tell you what, we'll use this. Okay, this will do. So we've made a low here, we've rolled over, we've made a new low, and then prices then closed back inside the 2 5 EMAs. So if you were bullish on euro dollar, but you knew it was having a pullback, but it's possibly just a pullback, then that's the sort of way that I would get myself into a trade. So if euro dollar at this point has pulled into a support zone, then I'd be saying, right, once we close back inside the 2 5 EMAs, I'll use that as my entry criteria. So they can be used in many different ways is what I'm trying to say. So it doesn't have to be just a trending market. Yeah, I have my 5 EMAs on every time frame. Yes, depending on which time frame I'm clicking on, then yes, that they will be there. Yeah, whether if I go to a monthly chart, they're there on a monthly chart. So it doesn't matter which time frame I'm looking at. Okay.
I had a question.
Yes. Sorry, Dan.
It's, Dan here. Yeah. So I'm guessing that this your strategies are applicable to multiple different markets. Is that correct?
Yeah, but I trade predominantly currencies and stock indices. So I trade the S&P and gold and a bit of oil. So those are sort of my go-to markets.
Right.
So yeah, these would work across any of those. Yes, all of the strategies I use. I have one strategy which is based on oil, which only trades infrequently. That's the only strategy I have which is specific to one particular market. All of my other strategies I can use against in any market. I don't like trading too specific in that I don't like trading a particular strategy which only works on pound dollar, for example. That to me is too fragile. I like a strategy that will work across any market. Yeah.
Fantastic.
I'm just trying to see, is the RSI an exponential setting? Good question. Let's go and have a look. Oh, I can't get into my charts at the moment. I need to come out of the. Let's see if I'll just come out of that again, and then let's see if I can. I'm just bringing up an RSI at the moment. Let's have a look at the settings for the RSI. It is, no, it's not an exponential, I don't believe. No. For the person who's asked that. It's a setting of 6, as I've said. So on the RSI. So there you go. Just a standard setting of 6. Do you look for confirmation over different time frames, and if so, would they be for day trading? Yeah, I mean, the person who's asked me that, when I'm trading, then I will look at confirmations as to what's going on the general market. But that strategy that I've gone through today, so that RSI strategy, if you get RSI above 90, then it tells us that the market is going up and has been going up for a period. So, but don't get me wrong, I would put it into context. If we've gone up and we've slammed into a major piece of resistance, we've done a 90 reading on the RSI, then we've done a little pullback. Would I still then buy it? Well, no, not necessarily if we've gone into a major piece of resistance. I'm a big believer as a trader that we should be able to put context into any market that we are trading. So I'm always checking my higher time frames, but I don't need to do lots of stuff looking at every single time frame and what the RSI is doing in every time frame. We don't need to do that. So if I saw an RSI extreme reading just on a 5-minute chart, it doesn't need to have done that on the other time frames. It's purely there on the 5-minute chart. As long as there's no major resistance in the way, then we're fine. We're good to go. What are the other moving averages on my chart? Yes, I've taken them off now, but I have, if we click on it, I have a 5 and an 8. These are all based on simple moving averages based on the closing prices. So 5 and 8, 20, 50, 100, 200, and 500. So some of those moving averages are very short, but then the 500 hardly ever comes into play, but it is useful. So as a support zone at times. So again, most of those bigger moving averages I'm using as support and resistance. That's what I'm using them as. Okay, right. I'm trying to work my way through these questions. It's quite handy actually that I did stop then, because we've got a lot of questions here. So
You know what? Just about to say the same thing, Charlie. It's great. Some super questions coming in, and I'm glad
yeah.
that we've just got. If you're okay, just to go through, I think it's great. People are loving it, so thank you.
Okay, so I've just changed the settings to 90 and 10, and it seems the RSI doesn't hit the levels very often. Exactly. Yeah, you don't want it happening all of the time. It's not something which is kicking off 3 times a day. It's not that type of strategy. So it's only there for when you get a momentum move. So yeah, absolutely. We don't want, if I can bring back the RSI chart again. This is on a 5-minute chart here. So well, I've got this on a euro dollar. In fact, there was the RSI went below 10 at 6:30 this morning. So if I take the charts back, as you can see, it went below 10 at 6:30 this morning. So then you're looking for a pullback now, because it's going to be a short, to the bands, to the upper 5 EMA, which it did, and then it subsequently rolled over. That was early this morning. But yeah, you're not going to see them, every hour. But they're there when there's a strong move in one direction. Then you'll see that sort of thing. We haven't had that since. So it did happen early in the early hours of this morning. I'll say early hours, 6:30 this morning. Why use an EMA and not an SMA? Yeah, good question. The reason I used an EMA, because all of my other moving averages are SMAs, and I know lots of traders use EMAs, but I usually use simple moving averages for all my normal moving averages. But the reason that I use exponential for this is it goes back to the reason why I initially created these in the first place, is because they were a stop management tool. So when I'm in a trend, they were devised initially to get me out of the trend. So let's say I'd been short through all of this. I'm waiting for price to then close above the upper 5 EMA. So I wanted those to use an EMA because it would track price more aggressively. That's why. Yeah. Absolutely, definitely best to test it out. Yeah, I always say to people whenever I teach any strategy that they should take it away and go and have a play with it, go and have a test with it. I'm not saying just take it away and just immediately go and start trading with it. You should test anything, and the reason why people should test stuff, and I'm sure you've had other presenters come on over yesterday and today who will talk about this, is because one, it gives you confidence in the strategy. So in order to keep scroll back the charts and run a manual test, or even if or automate it if you want to do an auto test. The only thing with auto tests is then just make sure they're accurate, because they're not always. But yeah, definitely back test, because that's the only thing that will give you the confidence to actually go away and actually trade it live. Some questions I'm not answering because I've already sort of just covered them. So I'm just, are daily pivots useful for this strategy? I don't think so. No, I don't use daily pivots myself much. I have a strategy that I use a main daily pivot with, but I don't use them a huge amount. But again, that's down to personal preference. But so no, you don't need daily pivots for this. Is this a Forex strategy? Have you used it on Bitcoin? I think Dan asked me about this, but I don't know if when this question came in. It's a strategy that I use on FX. Could you use it on Bitcoin? I think go away and have a test of it. I think it should work on Bitcoin. Yes, it should work, but go and test it. Yes, the ATR is based on the 5-minute chart. Yes, it depends, but it depends on which time frame you're using. So the examples that I've given you today are on 5-minute charts there, but on a different day, it might be, you might have seen an RSI reading above 90 on an hourly chart, in which case you would use an ATR based on the hourly. So whatever time frame you're using, you use the ATR based on that. What's the MACD again used for? That's entirely different work that I do. So I'm not here. I haven't got hours and hours to present to you on the MACD and how I use that. So it's just that it's there. When I took these screenshots, the MACD's there. I can take it off for you if you like. There you go. But yeah, I always have an MACD, and it comes into play at certain times with certain things I do. But yeah. In your experience, are the results better in volatile or quieter markets? Well, you're going to find that you only get an RSI reading if you're getting a strong run in one direction or another. So if markets are quieter, then you won't get them. and so you'll go through periods where you just won't see it happening, because the markets have to be having a bit of a strong run in order for it to happen. So yeah, they just won't set up if the market's quiet. The 6 setting, no, the 6, I said at the beginning, the 6 setting is a setting that I've used for years. And like I said, it's not a standard setting. You have to adjust it. The standard settings on most charting software is 21 or 14, as I said at the beginning of the presentation. This is a unique set. I say unique, it's a specific setting for this strategy. So yeah, it is purely for this. You wouldn't use a 14 setting for this strategy because it would hardly ever set up. You might want to go and test it because it might still work, but it would be very rare. So using a 14, so I use a 6. Do you enter the trade on a limit order at the 5 EMA, or do you wait for the candles? I enter the trade as it happens. So as it's a day trade strategy, as the price comes to the 5 EMA, I'll be there, and I'll hit it at market as it hits the 5 EMA.